Think you understand taxes because you took a basic economics class? Think again. For Gen Z, there's a whole underworld of tax regulations that could be either your biggest burden or your greatest superpower, and nobody's talking about them. In just minutes, you'll discover why the current system is designed to keep you in the dark and how you can flip the script to legally pay less, starting today. Stay with me, because by the end of this video, you're going to see money differently. Not just what you earn, but what you actually keep. Let's start with something that's going to sting a little. The average Gen Z worker between 22 and 27 years old believes they pay somewhere around 15 to 20% of their income in taxes. That's the number floating around in their heads. That's what they think the deal is. But here's the real number. When you factor in federal income tax, state income tax, Social Security contributions, Medicare, sales tax, property tax baked into your rent, and all the little invisible levies attached to everything from your phone bill to your streaming subscriptions, the effective burden creeps closer to 35 to 40% for many young workers. Some estimates push even higher depending on where you live. Think about that. You could be handing over nearly half of everything you earn to various levels of government, and most of you have no idea because the number never shows up as one clean line item. It's spread out, it's hidden, it's designed to feel painless so you don't ask too many questions. And that's not an accident. Here's the part that should make you genuinely angry. You spent 12 years in school, maybe 4 more in college. You learned the quadratic formula, you dissected frogs, you memorized the dates of wars that ended before your grandparents were born. But did anyone sit you down and explain how a W-2 is different from a 1099? Did any teacher walk you through what happens when you freelance and suddenly you're the one responsible for both sides of Social Security? Did anyone explain what a marginal tax rate actually means, that you're not paying your top rate on all your income, just the slice above each bracket? No, they didn't. And that's the gap, not a small gap, a canyon between what the education system offers and what real financial life demands. Schools teach you to be an employee. They prepare you to receive a paycheck, not to understand one. And the moment you step into the real world, that canyon becomes very expensive very quickly. The tax code is 70,000 pages long. You were handed none of them. Now let's talk about the taxes nobody calls taxes. Most people think about taxes as the chunk pulled from their paycheck before it hits their bank account. But there's an entire layer of taxation happening in your daily life that never sends you an invoice, and it's costing you just as much, sometimes more. Inflation is a tax. When the government prints money and prices rise faster than your salary, the purchasing power you lose is effectively a transfer of wealth away from you. Nobody calls it a tax, it doesn't show up on your return, but it is absolutely a tax on your savings and your labor. Fees are a tax. Bank maintenance fees, ATM fees, overdraft charges, subscription auto-renewals you forgot about, these are all quiet extractions from your income that function exactly like a tax. They're just collected by corporations instead of governments. Opportunity cost is a tax. Every dollar sitting idle in a savings account earning 0.01% interest while inflation runs at 3 or 4% is losing real value every single day. That erosion? That's a tax on your passivity. The system doesn't need to come to you directly, it just needs to make sure you're not paying attention. Here's where it gets interesting, because the same tax code that seems designed to drain you is also loaded with legal tools that the wealthy use constantly, and most of Gen Z workers have never been introduced to a single one of them. Let's talk about a few of the big ones. First, retirement accounts. A traditional 401k or IRA lets you contribute pre-tax dollars, meaning you lower your taxable income today. If you're 24 and earning $55,000 a year, maxing out even a portion of a 401k could drop you into a lower tax bracket immediately. That's real money you keep right now, not just some abstract future benefit. A Roth IRA flips it. You pay taxes now, but every dollar that grows inside that account comes out completely tax-free in retirement. Tax-free growth, legally. That's in the code, page 1 of the Wealth Playbook. Second, the side hustle deduction. The moment you have any self-employment income, freelancing, content creation, selling on Etsy, driving for a platform, you unlock a world of deductions that W-2 employees simply don't have access to. Your phone becomes partially deductible. Your home office, your software subscriptions, your professional development, equipment, travel for work. The IRS essentially lets the self-employed write off the cost of doing business, and most young people with side income have no idea they're leaving hundreds, sometimes thousands of dollars on the table every single year. Third, the student loan interest deduction. If you're paying off student loans, and statistically there's a strong chance you are, you can deduct up to $2,500 in interest paid per year. Income limits apply, but for most early career earners, this is free money sitting on the table unclaimed. Fourth, the health savings account. If you're on a high-deductible health plan, an HSA gives you a triple tax advantage. Contribute goes in pre-tax, the money grows tax-free, and withdrawals for qualified medical expenses are also tax-free. There is no other account in the entire American tax code that does all three, and most Gen Z workers don't even know it exists. These aren't loopholes, these aren't gray areas. They are sitting in the tax code, written there by Congress, used by people who had accountants to tell them about it. You just weren't given an accountant. You were given a frog to dissect. Let's talk specifically about something that's blindsiding an entire generation of young workers: the 1099 trap. Gig economy work is exploding. Freelance design, content creation, tutoring, consulting, platform work. More Gen Z workers than any previous generation are earning income outside of traditional employment, and most of them are completely unprepared for what that means at tax time. When you're a W-2 employee, your employer splits your Social Security and Medicare taxes with you. You each pay 7.65%. Most employees don't even notice their share because it's pulled before the paycheck. When you go 1099, when you freelance, when you're your own boss, you pay both sides, the full 15.3% on top of your regular income tax. The IRS calls it self-employment tax. What it actually is a gut punch that nobody warned you about. And here's the trap. The platforms don't withhold anything. Uber, Fiverr, YouTube ad revenue, Patreon, they pay you in full and send you a 1099 form at the end of the year. If you didn't set aside money quarterly as you went, you owe the IRS a lump sum in April, plus potential penalties for underpayment. The fix is simple once you know it. Set aside 25 to 30% of every freelance payment the moment it hits your account. Pay quarterly estimated taxes in January, April, June, and September. Track every legitimate business expense and consider structuring as an LLC or S-Corp once your side income crosses certain thresholds, because that's where the tax math changes dramatically in your favor. But again, nobody told you that. You had to find a YouTube video. Here's the part that's going to make the hair on the back of your neck stand up. The tax code doesn't just allow wealthy people to pay less. In many cases, it actively rewards them for the type of income they earn, not just the amount. If you work a job and earn $80,000 in salary, your federal income tax rate on that could be 22% or higher. But if someone earns $80,000 from selling a stock they've held for more than a year, the long-term capital gains rate is 15%, sometimes zero. Same dollars, completely different tax treatment, simply because of how the money was made. This is not controversial. This is written law, and the effect it has over decades is staggering. People who earn from assets, investments, real estate, businesses are taxed at systematically lower rates than people who earn from labor. And since Gen Z overwhelmingly earns from labor right now, you're operating at the most taxed end of the spectrum by default. The path out isn't to complain about the system. The path out is to start transitioning from labor income to asset income as quickly as you can. Every dollar you invest is a dollar working toward income that will eventually be taxed at a lower rate. That's the game. That's what every financially sophisticated person in this country understands, and what the education system never told you. Start an investment account, buy index funds, hold them. Let time and compounding do what labor alone never can. All of this comes down to one fundamental shift in how you think about money. Most people treat taxes as something that happens to them, something fixed, something unavoidable, a number that gets calculated and extracted, and there's nothing to be done.
That mindset is incredibly expensive. The people who build real wealth treat taxes as a system to be understood and navigated, legally, strategically, proactively. They don't wait until April, they plan in real time. They make financial decisions with the tax implications already factored in. They work with professionals who know the code, and they never ever earn money without first asking, what's the most tax-efficient way to structure this? That's not a wealthy person trick, that's a mindset. And you can start developing it right now at 22, at 25, with a side hustle and a laptop and a Roth IRA you opened last week. The tax code is complicated on purpose. Complexity is how the system preserves advantages for those who can afford guidance. But information has never been more accessible than it is right now. And the moment you start treating tax strategy as a basic life skill, like budgeting, cooking, or driving, everything changes.
Look, I'm not saying the system is evil. I'm saying it is absolutely not neutral. And pretending it is will cost you hundreds of thousands of dollars over your lifetime. The tax code was not written by people who had your interests in mind. It was written by legislators lobbied by people with accountants, lawyers, and decades of compounded wealth. But here's what's wild. Most of the tools they use are right there in the same document, available to anyone who knows where to look. So here's what I want you to do. Stop treating tax season like a one-week panic every April, and start treating tax strategy like a year-round habit. Open that Roth IRA, track those side hustle expenses, understand the difference between a W-2 and a 1099 before life forces you to. Learn the difference between earned income and capital gains, and start building toward the latter. Stop letting a system you don't understand make decisions about your money. Start learning the rules of the game you're already playing. Because the people winning financially are not smarter than you, they just got a different education. And now, so have you. If this video opened your eyes to something school never taught you, do me a favor, hit subscribe, turn on notifications right now, and share this with someone who's still letting the tax code work against them without even knowing it. See you in the next video.